Next, we move on to Friday, the 18th of October. So going on the last video, the volume did kick up on this day, and it did give you more volume than the previous day. So that's what you'd be looking for on this day. You would have stayed out of the New York session mostly yesterday, and this is what you'd be looking for. So let's go to the chart. So this was your previous day. You would have a discount buy area here and a premium sell area here, but it's not really a strong one because it's a small range. You'd just be looking for pressure from these areas. So there's no real big confirmation from these areas. Price can easily turn is what I mean. So this is your previous day New York Open. Drag that along, and then you get ready for the London session. Your mop is here, pre-London here, and then the London opening here. So this is the same kind of setup as the previous day, which you had down here, which took place before the London opening. So the pre-New York pushes price down once again, takes the Asian session low. You can see we're in a discount buy area, but it's not a major one, so you're not looking for a major move towards the upside. So this doesn't have big potential, but you're willing to take it because it's giving you structure. London opening here. Stop loss at the low down here because you're clearing this liquidity pool. That's just how the strategy works. Last high or low for your stop loss, and then you'd be looking for that volume to continue towards the upside. Hits the pre-London. Let's say you took a stop loss hit there trying to sell, even though it's going against the reversal, and then we get a continuation towards the upside. As it goes up, clears this high and this high, you would have took some partial profits because it's clearing liquidity, and we're going in a potential sell area. So this is yesterday's discount sell area, premium sell area. So that is the only trade you would have took there. Nice and simple for the London opening. You wouldn't really wanted to sell from here because it's early in the day. So this wick here is a big confirmation because going up to this area, you'd want to see more structure before it reversed. Like I said earlier, this isn't a great premium and discount buy area. So you could have took one or two stop loss hits here. So let's say that. Let's label that up. Let's say you would have tried selling there. That is a good one because you would have preferred to sell there because you're taking liquidity there. So you'd be looking for a rejection here, and you're in a premium sell area. So this sell from here is valid, and you'd have probably ended up at break even at worst. As price comes down, you take small partials. But let's say you took a stop loss hit there. This is earnings, I think. Around that time, yeah. So this is earnings season. Pushes up, takes your previous day high. Now that is a big confirmation if you've been watching the other videos. Pushes up, takes liquidity, then starts dropping. So that is, if you got in it quick enough, that is a valid sell confirmation. You're taking previous day high, you're in a premium sell area, and you've got correct structure. You're also taking the liquidity from this high here. So you have multiple sell confirmations there. As price comes down, hits these areas, you'd have managed your trade, move to break even, take partial profits, blah, 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 a normal. So that is a valid sell. Then we move on to the New York session. So the pre-New York is there, exactly the same as the London opening. You've got the high volume time here, and this area here is your New York Open. So, as I said earlier, if the London traders were selling, they would be selling from here. So this is a London session discount buy area. You just have to have that in your head all the time, really, just based on structure. So that is a London session discount buy, this premium sell area. So if the New York traders wanted to sell, They would push price up where the London traders were selling from to get a nice premium sale price, and then the New York traders open and then they continue to sell at that price. So that would be a clear valid sell area. We also have this one here. This is a valid buy area, but this is before the New York Open. So that is a valid buy area because we're pushing price down, taking liquidity from here in a discount buy area. So you'd be looking for the upwards move as it goes up, clears these highs, taking partial profits. By this time you'd have been moved to break even, and then you move on. Now the main structure, let's say you focus on the New York session only because you wouldn't be traded all day long. Now let's switch it up a bit, go to the 15-minute time frame. Quick check. Yeah, it's looking okay. Might get one more push down on that. Here we are. So this is your price action. This is the day we're looking for. We've got the New York Open here, pushes down, following the trade template, and it goes all the way down to this manipulation area here. So this is not a strong one, but it's a manipulation area from the London opening. So there's your consolidation, downwards, fake out, impulse move up, retest. So this area running along here would be your manipulation area. And you can see that's where price came all the way down to. But the clearest things here would be the liquidity grab here, and that the London opening is down there too. So you'd be looking on the smaller time frame, mainly the 5-minute, and watching for that reversal in here. So let's zoom in here and say you're on the 5-minute. Let's say you saw that as a buy trade. It bounced off the London opening, didn't take liquidity, you got into the buy, and by this time you'd have been at break even because there's support and resistance running along there from this low. So this early buy would have been at break even and then got stopped out. Now you don't get stressed about that, you just sit back and relax and wait for price to play out, and then you get a better setup. And the reason for that is because price then comes down, big red candles, takes the liquidity from where I just put that line, retest the pre-London and the main manipulation area. It takes liquidity from here, but it didn't here, so it's taking more liquidity. So this reversal is a much better setup than the previous one. So you got in somewhere around there, then we got a retest like you see there, and then the impulse moves towards the upside. So that, even though you might have took a break-even hit there, if you just be patient and let it play out, that is a better confirmation for a buy than the previous one. And then how you manage it is, as price goes up, by this time, support and resistance running along there, you'd been at break-even, small partial profits, then partial profits at the New York Open, and let the rest run out. Let the rest run. You might have took a small stop loss hit here because you're focusing on the reversal in case you're thinking it's going down. But that is it for there. Price goes up, makes a new high for today. There's an orange line running along there. Then you might have even got the sell back down. But the main move would have been that, and that's what I'd have been focused on. Very constructive. No need to overtrade. You'd been focusing on the main move, which is the sales from here or the buys from here. Then that is all you do for the rest of the day. So let's go back to the picture, and that's what it looks like, all labelled up. Nice and clear, so you can journalise it for the future. And that is the 18th of October. Focus on the London Open and the New York Open, and you'll get trades following the trade template.